Oh boy, here we go. Back to work, boy. Fantastic job today. Hope you guys made some money on that beautiful double bottom retest we talked about in last night's video. Now, boy, do we have another big day coming tomorrow. We got big news tomorrow morning. We have this beautiful trading range forming right now on the tick charts. And are you seeing this too? We have two of these previous breakout pullback zones from earlier on in the month of March just begging to be tested for tomorrow. If you ask my opinion, I think those two breakout pullback zones are probably where the money is made on Friday morning. We'll talk about why I say that in tonight's video, my favorite entries, exits. I'm going to cover the entire roadmap to make sure you get a roadmap, a game plan to make some money tomorrow morning as well. So charts are ready. Enough of the intro. Let's keep the good times rolled. Been a fun week to be a trader this week. Let's dive into it. S&P SPYs ready to go tonight. NASDAQ triple Qs are all ready. I have four very simple but important clues that are tipping us off to where I think the winning trades are waiting for tomorrow. One of those clues is right here on the hourly time frame. I like to use the hourly chart as an overall directional filter. That'd be a very important clue for tomorrow. It is easy to see we're bullish right now on the S&P SPY, bullish overall, the NASDAQ triple Qs here. Second clue is over now. On the calendar for tomorrow, tomorrow's not your average Friday. I get two things on my mind for tomorrow. First things first, personal income number. This is well known as the Fed's favorite gauge of the real cost for inflation. We will likely get some volatility around the number tomorrow morning, and I will cover some different tactics tonight to be able to adjust to some big moves we see off that number tomorrow. Now, also, don't forget, speaking of volatility, we know the markets are obsessed right now with tariffs. We have that deadline looming next Wednesday, April 2nd, for reciprocal tariffs. We've heard about the auto tariffs and the back and forth with the EU, Canada, and Mexico. So that's definitely something we're watching for tomorrow. But one thing we know about tomorrow, though, is that personal income number is probably going to give us some fireworks. So be ready for that. That's our second clue for tomorrow. Third and fourth clues now are over on the tick charts. Let's start first on the S&P SPY, and we'll go to the NASDAQ here as we get deeper into this video. If you're watching for the first time right now, all of these charts going forward are tick charts, all the time frames, upper left-hand corner, and that yellow line right there, in case you're watching for the first time, is the 21 EMA. It's the only tool we need to make consistent money in our trade room. Now, two more clues here on the tick chart in front of us. One really big clue is this trading range. Now, why is that range a big clue? Two reasons. One, ranges act like magnets. Two, they love to rotate back and forth using things like expanding triangles, things like pendulum swings, symmetry basically above and below. So we know that with a range like this, if you recall, that hourly time frame is overall bullish. I want to buy low and sell high. We'll talk about this as we go deeper tonight, but the techniques I will use to buy low are going to be a little bit different than the techniques we'll use to sell high because of that hourly directional bias on the 60. We'll talk about that more as we go deeper. The fourth and final clue, and I mentioned this earlier, are those two breakout pullback zones above and below us right now, specifically these breakout pullback zones from last Friday. I know it seems like forever ago right now, but last Friday, we finished the day with a range right there. That may not seem like a big deal, but if you watch these videos, if you're in my trade room, you know that one of the final steps of the life cycle of a trading range is a breakout and a pullback. You can almost guarantee a breakout pullback. This one has to come all the way back down to fill that gap. Bottom line is that breakout pullback zone, and there's also a similar one in the NASDAQ as well, that breakout pullback zone is just begging. If you understand how ranges like to rotate, boy, do I like that breakout pullback zone down below. And then a little bit above us here, we have that range up there. Again, you can almost set your watch to this. It's not an if, it's a when. anytime we see a range, a breakout pullback is almost a guarantee. It's going to happen at some point. And of course, on the S&P right now, up around that 5,800 level for tomorrow. And again, we'll cover these specific details, the NASDAQ as well, as I go deeper. So we're buying low, selling high. Let's talk about buying low first. There are three ways I can buy basically bear traps off that low. And don't forget, personal income tomorrow, I do want to talk about a breakout going lower. There are two types of trades and one easy giveaway when we know it's time for a breakout going lower. Later on in the video, we'll cover the shorts here off the highs. And again, because of that overall directional bias on the hourly, the shorts off the highs will be a bit different than the buys off the low. Let's now dive into it right now. One of my favorite trades in a range market, we saw one this morning in our trade room. As we make that run going lower into key levels of support, into that breakout pullback zone, I wish I had a crystal ball that worked consistently, but I've yet to find any consistent way to blindly buy into these areas. What I do is I would rather wait for a pullback to that 21 EMA, let the bears try twice. Remember, always a higher high, break out, let the bears try twice, and then buy into their stops going higher. I would love to get this thing running lower and then look for a bear trap. One try, two try, trap those bears in and use their stops to fuel that move running higher. Because if you're caught short down there, you have to buy your way out of that short trade when you get stopped out there. Easy bear trap off that low. Now remember, where does the market want to go? It wants to rotate all the way back with a pendulum swing in the opposite direction. So as this trade starts to make us money, don't just sit back and relax. Add to your winners. One thing that's completely transformed my trading over the past 5-6 years is adding to winning trades. We call these add-on trades in our trade room. It's a higher high in price and move right below that low. So again, it's a bear trap off the breakout pullback zone, off that triangle, off these key areas of support, and then add to your winner. Higher high, below that low, strong green candle above the moving average is your signal, and you're adding on the move going higher. Targets up top here. We'll talk about how to sell this thing back down again. Before we do that though, what if we don't get that bear trap down there? Sometimes we don't. Sometimes we get that strong run down and there's so many buyers down there, it just whoop and runs right back up again. V bottoms are very, very specific types of patterns. If it V bottoms and I can't get that bear trap down here, what almost always happens is it'll pop up and begin to grind going higher. That grinder is a dead giveaway. Watch, draw a trend line off the highs, bring that trend line down around those lows. Now look left, find some of these prior swings, and my goal is I want that bear trap, that first test off below that channel. It could be a bear trap below a prior swing. It could be a 2-try bear trap below the 21 EMA, 2 tries, and squeeze those stops. The bottom line though is if I don't get that bear trap down there like I want to find that channel and don't miss that first test off the low. And remember, in a range environment, leave that runner. Leave that runner. If there's one environment when you have to leave a runner, it's always going to be a range market. Now, I have a couple more bear traps I want to talk about going lower. I also want to talk about tomorrow if we see this thing break out going lower here. But before we dive deeper into this though, let's slow down for a second because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy for you. What the heck is this guy talking about? Bear traps, bull traps, range rotation. Don't you worry. I teach this entire strategy in my free trading class. In fact, I have a ton of examples of traps and add-ons, breakout pullback zones. Guys, I want to help you time better entries with this. start making more money, I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry patterns so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current strategy, your current indicators, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. Best part is it is completely free for you. And also, to keep in mind, guys, I'm going to put all the important links you guys need to learn the strategy. You know, most folks, they start making money all on their own, all from that free video course. So start there first. All the links you need in the description of the YouTube video. And keep in mind too, I post a ton of charts and videos and mindset stuff on Twitter, or X they call it these days. If you're on Twitter, X, give me a follow. Again, all the details you'll need to learn the entire strategy, hopefully earn a lot more money because of it, are linked up for you there in the description of the YouTube video. So now you know where to go if you're watching for the first time right now. Now, where was I? Yes, we talked about that bear trap down there and that V bottom. Now remember, we oftentimes see those breakouts, those bear traps, a pop up. But remember, ranges, they love to break out pullback. So every once in a while, we'll get a 2-try bear trap. We'll get our 1-to-1 target. We'll get that stop moved up, remove the risk. It's a winning trade. But sometimes, though, we simply don't get this thing to keep on going, and it makes one big leg running lower. Now, pay attention. Very important. The breakout leg is used as a measuring leg. And we'll talk about this more as we go deeper tonight. A very important, remember, range breakouts. The breakout leg is the measuring leg. The reason why I mention that is because once we know how big that pullback is now we know where that measured move will be. Now, knowing that, the area between that low and that measured move, this is the money zone. This is the money zone. Now, not a good place to sell. Range above us. Overall bullish on the hourly. Let's trap those bears in. We call these retest trades, right? Retest trades. We saw a great example. We mentioned this last in the video. Strong run down, retest trade. 1, 2, back up from there. Same game plan we had this morning in our trade room. We run down. We trap the bears in. We pop it up. They break out going lower again. Breakout leg, measuring leg. The money zone is between that low and that measured move. Obviously, not enough information yet, but that's the technique we'll use tomorrow. Once we now pull back, don't pick the bottom. Don't waste your time on divergence or reading tape out there. Just trap those bears in. Bears once, bears twice, higher high. I want 2 tries. I want those stops. I want to squeeze those stops. Make those sellers flip into buyers as they cover their position. That will fuel that move going higher. Now remember, again, you have to keep an eye on those add-ons. I want that separation off the moving average, that higher high in price, and move right below that low. A lot of examples, by the way, of bear traps and add-ons in that free trading course I mentioned earlier. So hit that link up top, the description of the video, learn these setups. They work so well. I know most of you guys know this already. You guys are making this stuff already. But anyways, that is a retest trade here, a double bottom retest. And again, breakout leg, measuring leg. We'll know more of that tomorrow morning. Now, I want to talk about how to short this thing back down again, because that could easily be a great trade for tomorrow as well off that breakout pullback zone. But let's talk about now, we got PCE tomorrow. We got tariff talk everywhere right now. What if this thing just pukes, right? I mean, come on. We were pretty bearish on that hourly time frame for like forever before last week's rotation off that low. So it wouldn't be totally surprising if a really bad PCE number, maybe the trade tariff talk escalates between the EU and the US right now. Would anybody be surprised if this thing takes a dump and runs back? No, of course not. So, okay, how do we trade it though? First of all, how do we know? How do we know when a market makes a breakout going lower? How do we know when to buy it back up or when to sell it on a breakout going lower here? Well, look what happened back here. Look back there, right? Look how it goes strong move down. Remember, the best entries are almost always scary. It pulls back, bears once, bears twice, squeeze back up. That is a bear trap. It's a strong run down, fails and back up again. If I see that strong run down, but now we start seeing things separate off the moving average. This is why I love the 21 EMA and only the 21 EMA. Don't put too many moving averages on your chart because it's too many voices in your head. If we start seeing separation off of that moving average, that is your sign. This now is a breakout. Now, one of my favorite trades in these situations is if I see a breakout going lower and I start seeing us separate off that moving average, the goal will be lower low above that high. And I always go like a half size trade on these, right? Half size position, quarter size position. They're a bit more aggressive, right? Again, we're separating off that moving average. Now, as it goes lower here, again, it'll be a bull trap entry. Basically, it's an add-on entry. It's a technical bull trap that we teach in our free video class. Now remember, the breakout leg, right, is the measuring leg, right? The breakout leg is the measuring leg. That's going to give us now our target. Then we're going to look left. We'll use the underbelly of this range right now. Look for a two-legged pullback. Think about a measured move. As always, I'm not going to try to pick that top. I'll look for those buyers trying once, trying twice, bull trap, and as always, that run back down to retest the low. So again, it's a relatively aggressive breakout entry with that separation, very important, off that moving average. Then we wait for the breakout pullback. We find the underbelly of that range. We look for that two-legged pullback. Think measured move. My favorites are measured moves go a bit too far, right? A bit more than a measured move. It's that bull trap with my target. Target now is back down to retest that low. And what do we call these? Retest trade, retest trade. If you learned one thing from last night's video, we know now that this is a beautiful spot to be a bear trapper, right? Be a bear trapper. Same thing. It's a retest trade now. Don't pick the bottom. Trap those bears in with that bear trap and squeeze those stops back up again. So again, how do we know when a breakout is legit? It'll break and separate and begin to grind off that moving average, find those highs. That's your aggressive entry. And again, it's breakout leg, measuring leg. That's your target. Then once we get that, then we know it's breakout pullback. It's retest buy time. That's the game plan for the breakout pullback going lower. So be aware of that if things get wild around that PCE number tomorrow morning. Now, what if we go higher here? Beautiful spot to be a seller, but we're overall bullish on the hourly time frame. Let's now talk about that now over on the NASDAQ. Again, on the NASDAQ, just like the S&P, we were bearish like for the whole entire year. It felt like this so far. Look at that bear market right there. So I don't think anybody would be surprised. Now again, the buyers, they have control right now. It was a bullish range into quad witching last week. They broke out, good separation. That's a bullish reversal. But again, with all the tariff crap going on right now, who the heck knows? This could easily get whacked back down and run back down. Buyers definitely have control here on the hourly time frame. That's a really, really big clue. Now, before we talk about the tick charts and dive into the entries for them on the NASDAQ here, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe to the channel tonight. I know we're all busy people and I appreciate you guys tuning in and watching my videos. So thank you so much for the likes, subscribes, all the ongoing support. Now, let's get our hands dirty here now and talk NASDAQ. Tick charts here. Over on the tick charts, the NASDAQ right now, you can see right away, it's the same idea here, right? There is that trading range. that beautiful, look at that gorgeous retest trade, right? Strong run down, they retest, 1, 2, back up again. A beautiful add-on, by the way, higher high in price, separation. Is anybody surprised that that add-on got bought up? And the amount below, the amount above. I mean, I'm not making this stuff up, guys, right? You can easily see it happening over and over and over again. And by the way, you don't need all these special indicators for this crap, right? The 21 EMA and market structure is really all you need to know. Those ranges, that range is one big clue right there. Breakout pullback zone below. I love this breakout pullback zone underneath. We talked about this all week this week in our trade room. We finished the week last week on Friday, got that big gap up, and this breakout pullback, we knew at some point, I didn't think it'd be tomorrow, but we knew at some point we'd come all the way back. And it looks like here we are knocking on the door here for that breakout pullback zone. Same thing above here on the NQ. I would say this whole area really, that whole area probably is the breakout pullback zone. In all reality though, you could say the actual breakout pullback zone is up around that area right there. But I would say though, this whole area though will be an area for a breakout pullback zone. And because that range below us is acting now as a magnet, again, ranges love to rotate. Now, we talked about the buy side before on the S&P, right? The bear traps, the V bottoms, the double bottom retest, the breakout going lower. So all the same stuff we covered earlier on the S&P can absolutely be applied here to the NASDAQ. Now, where things get a bit more, let's say complicated, if you will, is if we get this run going higher. Because this is where, because we have that, again, we're still technically bullish right now on the hourly chart. Again, maybe not beat it by tomorrow, but right now we are still bullish on the hourly. If we have this thing going higher here, being a seller off the high now is a bit more aggressive, right? Because we're going against the higher time frame directional filter. So knowing that, I still want to look for a bull trap up there, but this is where a crown reversal pattern will come in. Now, this pattern is very similar to a bull trap. It's still buyers trying once, it's lower low, it's buyers trying twice, but whenever I'm trying to go against that hourly time from direction, I always need to try to sell as high as I can. Why? Because there's a good chance here this range will act as a breakout pullback. Again, we're overall bullish on the hourly, so I have to assume that if we get this run going higher, this range will also act as a breakout pullback. I do not want to wait for the buyers to try once, try twice. I can't afford to sell low in that situation. Right now, if I go lower, because we're overall bullish, I can buy that simple bear trap down there. In this situation though, I've got to get now above that high. I don't want to sell as we're going lower here, because again, now this could easily tear my head off right there and rip higher without me here. So in these cases, as we go higher, it's buyers once, it's buyers twice, it's always two tries to get stops involved. It's always a lower low because buyers want to buy low. The most important thing though is I need to be in the green on this trade. I need to be in that 1-to-1 target on that trade before I make my way going lower. This is where a small adjustment, we call these crown reversals, they're basically technical bull traps like I teach in our free video classes. But the one thing is though, I need to make sure I'm selling above a high. Now keep in mind too, we may see something like this where it runs up, it gets whacked back down again. Oftentimes these V-tops, they grind down, we find that new channel. These in all reality are easier on the emotions because now momentum now is turned over again. These were a lot easier patterns, right? If we do get this tomorrow, that V-top reversal on this, mark the high there, and again, because we're overall bullish on the higher time frame, 60-minute, I want to sell above swings. So the most important thing is is if we go higher, I'm looking to make sure I get those lower lows, get those that higher high. And again, it could be a crown reversal like this. It could be a V top that grinds down, find that new channel. But again, my focus will be making sure I'm getting short on this against the hourly time for direction. I want to be above those prior highs. A lot of examples of these, by the way, inside that free trading class. And number two is that as it rolls over, don't forget to keep adding to it, right? Keep adding to it. Keep looking for those add-on trades we talk about so much in our video classes, right? Separation off that moving average and above that high, and trade that rotation back and forth. So up, bull trap above prior highs, running lower. Watch that separation off of that moving average, lower low in price. Just keep on selling, again, above prior swings on that move, going lower, and keep using that rotation for your targets back and forth here. Now, one last thing tonight here is, what if we break out? How would I know as we go higher here? How would I know when a breakout is legit? Again, it'll pop up, it'll begin to separate and grind away from that moving average. Now, in these scenarios, when it pops up and begins to separate off that moving average, again, not like that, right? It's not going to pop up and try and then fail, right? It'll pop up and keep going, right? It'll separate and keep going off that moving average. If I can get those buyers to separate off that moving average, there are two patterns or two setups I'm looking for here. One would be draw a trend line off that high, bring that trend line down around that low, look left, find some prior swings, get that bear trap below that low, get that try bear trap below that moving average. Again, this terminology will make a lot more sense once you take that free trading classes, right, and run higher. Now remember, the breakout leg is always the measuring leg. In these pop and grind scenarios, the breakout leg is still the measuring leg. What I do now is I pin that leg now at the low of that move. And that's going to give me now that final target, right? Makes sense? Okay. We pop up, we grind up, we find that new channel, and we're buying off the low of that channel. Also, remember, that trading range will act like a breakout pullback. So if this thing really starts cooking, going higher here, and breaks out and separates, don't be surprised too if we see a sharp two-legged pullback. Again, think about a measured move. Find those prior, what was resistance, use that now as support. Don't pick that bottom. That bears once, that bears twice. Trap those bears in, get that bear trap. Remember that add-on trade, get that add-on trade, that separation away from the moving average. We're buying below that low and going from there. We know that range up there. That will be our big magnet on both the NASDAQ and the S&P. So leave that runner. Now you guys know my game plan for tomorrow: buying low, selling high, when we have a breakout, how to trade the breakout, and how we use that hourly time frame as my directional filter for picking what type of bull traps or bear traps I'm going to use. Now, speaking of tomorrow, the place to be is in my trade room. Every morning, 8 o'clock Eastern time. Guys, I'm going to put all the important links you'll need to learn the roadmap, time better entries, make a lot more money. Again, start first with the free video course. All the links you'll need in the description of the YouTube video. Enjoy that free video class. Then come join me in my trade room and we'll do it all together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.